fact about us each day on there. What do you got? Give me a fun fact about you. What's fun fact?
I don't love Disney as much as you do.
Ooh,
Yeah.
not a painful fact.
No, I didn't say I hate it.
That hurts. You let me. Here we go. Let me share the wonder and wisdom. Mystery. Was Disney hired today? I got a really good one. I was thinking about it last night. No, Disney not hired today. Shoot. Another day. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing today? I know it's Thursday because it says right here on my thing, it says Wednesday, and I know it's not Wednesday, so it's Thursday. Hope you're enjoying your day. Welcome to our show. We call it the Closing Beat because we talk about the stock market here, and the market's closed, and we use the word beat because our name is Jazz Wealth. We're financial advisors, and just a little bit offbeat if you were to ask me. Hey, tonight, our class, we do a weekly class for clients only. It's called Wine and Wealth. We just hang out. We're building out a bar over here and everything just to kind of hang out and really talk about your dough in a relaxed way where you can kind of ask any question. But I usually have a topic, and tonight's topic is going to be your actual savings rate. Going to show you that. Show you how to see what your savings rate will produce in the future, where you're actually saving the money. So if your savings rate is 10%, where's it going, right? Where's the most efficient place for it to go, and how do you figure that out? We're going to do some fun stuff tonight, so grab a drink, come hang out with us there. I do appreciate all of you that are really in tune with that and have lots of questions. I love it. That's why I do it. Most financial advisors want to invest for you and then just talk to you around Christmas time. I want you to ask questions constantly, right? Bug the living daylights out of me. And some of you do a really good job. We could do better with others, but we're working on it. Okay, stock market today. Rather interesting day. We got some retail sales numbers, lots of other good things happening out there, and the market could not break the 50-day. We sold off all pretty much throughout the morning down to the 50-day. It looked really weak. Remember, yesterday, technical bounce off the 50-day. There was no other reason for the bounce, and it looked like those technical traders are going to be in trouble. And I would still argue that maybe they are going to be in trouble if we don't pick up some steam real quick. The NASDAQ is the better performing of the indices here right now. It was the first to turn positive on the day, and it actually pulls ahead of the S&P year to date by about 1%, right? So we're picking up some steam there as far as being first place there. Also, it leads over the last 1 month too. Just that extra strength has really picked up there. I don't have much to say there about the NASDAQ. I want to point out my T-Mobile, the puts that I sold on T-Mobile, closed those out today. It was just a real quick mover. I don't normally do things like that, but it was just a quick 30% in, 1 day. So I would expect that keeps bouncing, but it's going to do it without me. So enjoy the ride if you're playing along. As for the NASDAQ, if you're looking at some of the other names today, inside of it, just a handful of things really related to semiconductors. And we'll point out AMAT, Applied Materials, looking like it's going to break out there. KLA 10 Core, or CLAC as I call it, moving to new highs. Very strong. I would have hoped for that to pull back a little bit. Did not do that. So in the NASDAQ, you got semiconductors waking up, and the NASDAQ, of course, stronger than every other index out there at the moment. If you look at the Dow here, it is in last place over the last 1 month, and officially in last place year to date. The Russell took over third place here today, which happens there. I will point out Salesforce. That's the one where I sold the 240 puts on that one. Got a nice bounce here, and I want to share a little bit more about the thought process there with a tool that is soon to be available in our research site for research members. Check this out. So why do we look at Salesforce bouncing? First of all, right to the 50-day, good price support, a good technical level that lots of people were likely to look at. It's not my belief that this technical level will hold. It's just my belief that other people will believe that technical level will hold. That's how you got to look at it. And over the last 2 days, or sorry, what is it, 2-3 days here, if you were to look, you see it has bounced almost 3%, right? And so you go, what's the likelihood that it's going to bounce 5, 6, 7%, right? If you sold any version of puts out of the money, you likely had, you definitely had a profit there. And so now you go, it's fallen 7%. What normally happens after Salesforce falls 7% in 8 days, right? what happens over the next 8 days? Does it go higher or lower, whatever? Well, now we are actually about ready to do this. Let's take a look. So we're going to look, this is a tool that is literally just almost available on a research site. We're working out the last of the kinks that are visual in nature. Let's try it. Let's say if Salesforce is lower by 7% in any 8-day window, I just put 20 years, doesn't matter, you can look back as far as you want, what tends to happen going forward? So here are any time that it's happened there. It's only done that recently here, by the way. So we've fallen 7% in an 8-day window. This is what happened in the 8 days prior to that. So mostly positive, and then just had some sort of pullback there that was bad. And here's what happened in the next 8-day window. We also summarize that up top here. Anytime that it has a 7% decline in an 8-day period, this is what you expect going forward. You got a 50-50 shot that it's going to be positive at the end of the next 8 days. Now, right now, I know that we sold puts and I have a profit, right? Darn near 50% profit there. So, right? Do I want to wait, take a 50-50 shot that I'm actually going to make, what, an average of nothing over 8 days? Like it's going to chop around, median move is a loss. Do I want to mess with that? Granted, there's only 4 data points to go on. I understand that. Sometimes, when you're being ultra specific, you get less data points. But still, if you're going to be unemotional about the whole thing, and you're going to just say, I just want to know the stats, right? Give me stats. If I have a profit, statistically, should I stay with this trade or should I just take it and move on? And that's basically how I came to that decision there. So down 7% in 8 days, the odds were not amazingly good, right? There was no reason that I see I'm missing out on anything. Take that there and run with it, right? If you were break even and you found out that data, you may likely say, well, my puts are out of the money, so I'd really have to have a decline of more than, in that case, it would have been $10. So what's the likelihood that it falls $10 in the next 8 days? It never happened, right? So I could look that up and say, even though it hasn't bounced yet, it's likely not going to fall $10. I'll probably hold the trade. But if you already have a sizable profit in just a couple days, using options, of course, I'm not trying to emphasize the profit, and you know that the stats are, it's not going to probably do a whole lot, and the market's flirting with that 50-day, the S&P anyways, and it's trying to break down, I don't know, man. I think I'll just run out and look for something else there. So that will be available for research members, that tool, which also has calendar search as well. Hopefully by the time you wake up tomorrow. Now the difference there is, calendar search would be if there was a month in particular that was positive, what happened the next month, and so on and so on. Now what I'm doing is I'm saying I will accept any 8-day period. So it doesn't have to fall on the 1st of the month through the 8th. It doesn't have to be exactly like this happened. I'll take any 8-day period over the last 20 years and see what happens. Anyways, that's what you have there. I didn't mean to spend a lot of time on that. Just wanted to show you the thought process that takes the emotion out of it, so you're not going, yay, I have a profit, and then maybe tomorrow, I had less of a profit or a loss. No sense in messing around with that. It's what everybody else is looking at, so you might want to have that in the back of your head. Okay, this is the index, the Dow here. I'm using the Dow futures to show you that we are officially under the 50-day moving average and have broken. It's the worst year to date and also the worst over the last month. Where do you think it's going to close next Friday, huh? Well, let's see. If you're playing Guess the Dow, our little game that we're doing here, Cody's going to tell us where.
Yeah, we got our new leaderboard today. We got Peter, Charlie, Dave, Jarek, and Alan on the board. 3 out of those 5 are clients. So congrats to them on being on the eve of the close, on being on the board. By the way, are you doing a soft rollout of the new Speakeasy tonight for Wine and Well?
Kind of put me on the spot there, huh?
Well, I think you said you were doing it, and I was like, I didn't know.
I think I might. Yeah, I think I might roll. Yeah, we'll do it.
That's soft rollout.
Yeah, it's still a work in progress, but we'll do it. We got the new Speakeasy halfway built. I came up with a new idea to make the ceiling of it float from the ceiling, hang from the ceiling, so it's not actually supported. I don't know how safe that is over there. Do we want to tell them how the ceiling is supported? Probably not now.
No, they may find out during the show, though.
They may find it, yeah. I'll test it out. If it seems safe, we'll do it there, but now I'm nervous. So congratulations, those of you that are close. You got 1 day to go. Hopefully the Dow doesn't move tomorrow or not move too much, and you find yourself a winner. All right, let's go on to some other cool stuff, because that's what we do. Okay, here's the S&P. Still some more weakness. Well, there's still some real weakness, I should say, if you're looking through the S&P. You'd have to really just kind of be going stock by stock by stock to see. But I honestly don't think that this is magically just going to bounce tomorrow. I think you'd have to see a really solid day, start off the morning, and really not pull back in order to get people to believe that this is going to hold. Otherwise, I think there's still a little question there, right? You got miners today were some of the weak spot. Look at Newmont Miners breaking down here under this base. Newmont Mining loses 4% in a day. A couple others here. You got L3 breaking the 50-day moving average. Dover also almost breaking the 50-day moving average there, so starting to look weaker. One of the really strong ones lately, Otis from the spinoff there. That looks like it's breaking the 50-day, and that's just a couple stocks to show you what is really going on under the surface. So that weakness I've been pointing out for weeks now, it seems like it's not done yet. I don't know. And you look at Newmont, you could use that tool for the same thing, just kind of tease you here. Hey, Newmont falls 4%. Is that odd? Actually, I'm just curious. You mind if we look real quick? So Newmont falling more than 4% in one day, just 20 years, I guess. How often is that, and what happens? Yeah, this is pretty rare. Okay, so check it out. So anytime Newmont falls more than one day, 4%, it's been more volatile lately. Here's what you have going forward. There's actually only, 4, 5, 6 times. You got a 50-50 shot that it's going to be positive. And if it's positive, it's a small little gain. So what does that tell you right there? So that, take it away from, we were talking about trades a minute ago. Would you buy Newmont? So if someone were to ask me that question right now, hey, Newmont broke down today, looks like it's discounted, would you buy it? You go, well, no, probably not, right? What are the odds it's going to reverse tomorrow? 50%, right? It's just not likely going to see a bounce. You could change it and go from here and say something like, all right, over 3 months it falls, what would that be? Like 25% in 3 months or something. You could look at things like that and see if it's more of an investment. Doesn't always have to be about a trade. I'm off topic here, but nonetheless to say, you got a little breakdown in Newmont, and it is likely not a time to buy it, at least at this point here. All right, moving on. We got the Russell 2000. It's been sideways for over 6 months. We talked about this yesterday. So you have a sideways move where for over 6 months it has not hit a new high, yet it has not fallen even 10% over that 6-month time period. So here's the question. How do you invest, the thumbnail title, how do you invest in an index, and your lesson of the day here, that's going sideways? What do you do? Because you know how I always say, okay, you don't want to invest in something that's sleeping. You want it to prove to you that it's strong or prove to you that it's weak, so you can get a discount if that's how you feel. So what do you do when the little sucker's going sideways here? What do investors do? So it's not, I don't want this to be my opinion. I want this to be fact, right? Or statistically based answer. So we're going to do that. Okay. When an index goes sideways, think about what happened. You had a bunch of winners, and then you have nothing here. So if you're a fund manager, mutual fund, hedge fund, whatever, you have to keep that momentum going, so you go stock picking. It happens every time. It could happen to a sector. It could happen to an index. I promise you. I'll show you how this works. So you go sideways here. You can't just go on vacation and say, I'll wait till the markets wake up. This performance has to continue. Otherwise, you might lose your job, right? So what happens is investors or the big fund managers, they go stock picking. They look at every other opportunity that there is aside from what got you to this point. So there were a group of stocks that took you to this point, right? Likely 10% of the Russell or something was able to make this happen. Then we go sideways. Where's the other opportunity? That's what happens there. So let me show you a quick thing, and we'll try not to scare you here. Okay. Hang in there. Here we go. So this is the Russell 2000. There's actually not 2,000 stocks in the Russell 2000. It's kind of a misnomer. It's like 1,800 and some. You can look it up. So what we did is we said, the stocks, let's first categorize the best performing to the worst performing stocks that got us from this low, which is September, to this high, which was March, right? So let's first do that. Let's organize all those stocks. And we broke it into 10 groups. So we said these groups of stocks were the worst, this was the second worst, and so on and so on and so on, all the way up to the best. Now that we have those in little buckets, let's track the performance from the record high, just to see what people did. So in other words, we got a market that moved all the way up to highs like this, had a great move. Now let's see where the money went after we hit the record high. This is not trying to show you like what stocks to pick. This is showing you what people do. So in other words, we ran all the way up here, we hit a high. Where did the money go while we were moving sideways? Out of the 1,800 stocks, where'd the money go? And look at what you have here. Money leaves the best performing stocks, the stocks that got you to the high in March, right? It also leaves the worst performing stocks. Why is that? Because if the worst performing stocks could not participate in that rally from September to March, what's it going to take to get them to go, right? So investors say, well, I don't want the worst ones. They were dogs. They were wrong. You know, we're going to get trades wrong. Those were dogs. I don't need the best ones anymore because I made a massive profit on those. So now the money gets put over into the middle of the pot, right? The tough area that most people don't look at. Why is it the tough area? Because if a market's trending higher, you can very quickly find 10% of the stocks that are leading the way. You can find 10% of the stocks that are dragging behind, but it's hard to go stock picking in the middle, right? So this is real work that you're seeing by fund managers. Get out of the easy trades, move into the tough ones. So these are the stocks in the middle of the pack. This happens every time. Think about it. It's just emotion. It's the need to drive alpha, right? Or to outperform or to look like you're the best. So you cannot sit still. Every time there's a sector that does really well, we all go look for the Apples, Facebook, Amazon, Tesla, Netflix, right? And you go, well, that's easy. They're the ones moving the sector. When that sector, like tech or communication services, goes sideways, now we have to go look at the rest of those stocks. There's good value. There's good trades to be had there. We just have to go dig through all the other stocks. And that's why you see money moving into the middle of the pack. This will change, right? As soon as these pull back, that's considered strength. So when all these stocks now fall on an average of 10%, so now people go, well, hey, I got profits over here. Thank goodness I found something to do while the Russell was going sideways. So now I can put money back to work over here. These were the strongest stocks, and now they're trading cheaper than they were. Maybe they'll continue to bounce. So all that to say that this happens every time. I could do this next time something goes sideways, we'll take that sector, we'll take that index, and you'll see the exact same thing because it's not a belief that people will do that. It's what investors have to do to stay not relevant, but to stay ahead of the game, right? And so that's just a fun way to look at it. A little bit more than I guess I would normally cover, but for that, we'll move on to new highs and new lows. All right, let's see what we have here. New highs today, there were 9 of them. New lows was just Hormel. That is a weak-looking stock right there, so that'd be a fun one to put in the old research tool and see how that one goes. But nonetheless, not ready to wake up just yet. Carmax looking like a breakout here. I just don't like, some of you could probably finish this sentence, I don't like, you could see the breakout, that it used up a lot of energy to break out. That part bothers me, but nonetheless, it's breaking highs there. Carmax looking strong, and they should be with all the cars they're selling. All right, SIVB, this is SVB Bank. So you've got a sideways consolidation here as well. It did not use all of its energy to break highs. So maybe a breakout in financials, or a breakout in SIVB if financials just get a little boost, right? You want to have the help of the sector if you can get that as well. HCA, you probably heard of them. Just a strong one. You know, there wasn't many on the list, so I just wanted to point that out. And lastly, Regency. This is a REIT. Nice pullback here. So it broke out, pulled back real quick for you. Looked a little scary for a day there. Completely erases it in one day, and now it's back off to the races. So not bad there, if you ask me. All right, stocks in the news, and then you can ask your questions. I'll take your questions while I can, and then get ready for the class tonight. AMC says we're going to start taking Bitcoin. Well, they are kind of taking Bitcoin right now, but they're going to take other cryptocurrencies for you to come watch the movies. Why on earth would you do that? Like, it just really proves that the average or novice crypto investor / trader has no idea about being efficient with those coins. It's starting to bug me a little bit. Nonetheless, the stock was still lower on that news because how many people are actually going to use coins to do that? Sadly, probably a lot, but we will see. All right, CF Industries here. They said they're going to actually stop production. There's actually a lot of news like this today, stopping production, stopping importing of the how do you say it? The raw goods to make products and things because of inflation costs, because of shipping costs. We're starting to slow down on production ahead of the holiday season. So imagine if this makes it towards the toy makers, game makers, and things like that. That could be tough. We already know the chip makers are struggling. But it didn't matter. The stock was still higher by 1% today. I think this ideally helps their margins a little bit, but I'm not sure. I haven't had the time to look into that a little bit. That's what you think anyways. When they say they're going to cut production of stuff, you go, okay, that's sort of bad news. Sales are going to suffer, but your margins likely are going to go up. So that might be part of the excitement there. All right, EA Sports says that, hey, we're going to keep our guidance the way it is. We're not lowering it. We expect strength continuing here. And the stock trading at the low end of the range. I mean, that's a sideways stock, right? So maybe there's something there. I don't know. Did you guys catch the SpaceX move? Sending the 4 people to space? That was pretty cool. Anyways, this is Virgin Galactic, not SpaceX. SPCE is a symbol. Got his profit target lowered from 51 down to 30, I believe. Yeah, Cowan was up here at 51. Had to bring it down. It's going to be a tough business there for them. Wish them well there. And Timken, sorry, they make like bearings and different parts for, it could be cars, trucks, tractors, things like that. Very industrial company here. I like this kind of waterfall drop in the makes here. Lowered their guidance as well. And this is another one that said, we have supply chain issues because of inflation, because of shipping costs, because of actual demand. So tough for them. And well, we'll see what happens going forward. What else do we have? I think that's about all I got for you today. Basic materials were the weak spot today, really thanks to Newmont and Freeport. Lamar paying out $1 in dividends. You got Match Group. Remember, this takes place tomorrow, right? No, a couple days still. Match Group is going to be in the S&P 500 now, taking the place of Perigo, I believe. Could probably look that up. And you got a whole bunch of other changes actually in the S&P 500 and S&P 600 coming up. So there you go. I will take your questions if you have them, and then we'll get on out of our way. Get ready for Wine and Wealth tonight. Come hang out. Be a good time. Space, yeah, that was pretty cool. I did enjoy watching that. I think that stuff's cool anyways, but sending those 4 people up to space there, they looked like they had a good time doing it too. Lots of thumbs up, lots of clapping and everything. I thought that was cool. Very cool. From Kuwait. Wow, you made it over there, man. That's pretty cool. Dang. I like it. Market crash? I don't think there's going to be a market crash. The question is, when is there going to be a market crash? What would be the reason for a crash? Pullback, yes. No crash. Speaking of not crash, but big move today. Look at gold. Big aggressive move. You've been seeing that more. Gold has been more volatile in the last 4 or 5 months than probably its average. I haven't measured that, but I'm just kind of looking. I mean, those are some impressive electronic moves, by the way. Those happen after electronic hours, or cash hours. Yeah. What do you think of IEP? I mean, let's go over here. What's the thought behind it? Not growth, right? Gonna hang with Mr. Carl Icahn. What's the thought? You think this is discounted right in here? So for me, I don't like buying weak stocks with a strong but weakening market, right? You want to buy weak stocks with a very weak but strengthening market is a way to look at it. You don't know that you're going to have the best one, of course, but at least you have the idea that the market itself will help you. Index purchases may help you there. So I don't really like that one there. Sold 3 calls on a SPY, 447. So happy, whatever, 18 man. Sold for 600. You looking for a pullback then? There you go. Oh man. Jeremy, do we offer any option-specific education training? Got a handle on the basics, but still flies over my head. No, not really. I'd be lying to you if I said yes in an aggressive way. Sometimes when our wine and wealth classes we don't have anything eventful happening. I will talk about that because I know people like the details of all that. But you'd imagine over the last year with the virus and everything, we've been pretty busy there. So I don't mind doing it, but it's usually just a place filler for, hey, there's no real new news to cover this week or anything exciting to share. Do you ever read Bloomberg Business Week? I do not. Nope. I try not to read sponsored news like that. I just kind of read the event. I just want to know what happened. I'll make my own opinion, but at least, or think of my own research to do, but I just like to know the actual event. I don't know. And maybe high oil prices if they get out of control. Today was a little bit better than yesterday. Still above $70, but we don't have that consistent uptrend. We don't have any parabolic move to the upside. You know what I mean? We had the hurricane and all. That's fine, but nothing. A tax crash? Well, the problem is the tax proposals aren't as bad as what was campaigned on. So it's another one of those things where, and it doesn't matter what side you're on, you campaign, with all this great stuff, and then you actually win whatever seat that you have, and not as much of it gets done. Well, that's what happened. You have Biden had promises of really high tax rates, and now the proposals are actually much lower than what was campaigned on. So it's like you have the perception of, oh, well, that's not so bad. Maybe, all right, I can live with that if I eventually make it up there, or I'm one of those that has to pay those taxes, supposedly for the rich. So I don't know if it'd be a tax crash. Yeah, I don't know. Okay, get ready for Wine and Wealth here tonight. I will see you there if you're coming to join us. And for the rest of you, thanks for hanging out with us. We're kind of been working nonstop here to get things ready, but appreciate you watching the show and hanging out. I hope you learned something today. A little bit different way of talking about the markets and how to look at them. So enjoy the rest of your day. We'll see you later in Wine and Wealth if you're one of our clients, and enjoy.